Good evening, sir.
Evening. Audit and assurance. So let's discuss one more technical topic. Audit report. So many. So many. So let's discuss a technical topic called audit report. What's the purpose of audit? What is the purpose of audit? To express opinion on financial statements. To express opinion on financial statements, whether they give true and fair view or not, and are prepared according to accounting standards. Mean we need to check the financial statements of the company. Who prepared the financial statements? Who prepared the financial statements? Company management. And we, being auditor, need to check the financial statements and express opinion on the financial statements. Whether financial statements are true and fair and prepared according to accounting standard or not. Where we express the opinion on a page that is called audit report. Mean what is the final outcome of our audit? One page in which we will say financial statements give and fair view, or financial statements do not give and fair view. And then we sign and put the date. That's enough. Audit is completed. So let's discuss how many types of audit report are there and under what circumstances situation auditor express what kind of opinion. So we're going to discuss about types of audit report. Types of audit report. The first type of audit report is called standard worded unmodified report. Standard worded unmodified report. There is a standard ISA 700 who has already written down a wording of the audit report. And according to this standard, if you want to express opinion, financial statements give to and fair view and are prepared according to accounting standard, what you need to do, you need to issue the standard worded unmodified report without any changes, without any addition, without any deletion. Mean you just need to copy paste the wording of ISA 700. It's already written in that standard worded audit report, financial statements give to and fair view and are prepared according to accounting standard. What you need to do, just state the name of the company to whom you have audit, put your name, signature, and date. What else should be in the audit report? It's already written by the standard. And standard already have mentioned financial statements give true and fair view and are prepared according to accounts. Mean if you want to issue opinion in favor of the company, mean you want to say financial statements give true and fair view, what you need to do, just copy paste the wording of ISA 700 standard wording report. Don't need to write anything, don't need to add anything, don't need to change anything. Just put the company name, need your client name, and your name, signature, date. When we should issue this report? When there is nothing wrong with the financial statements. When financial statements do not have any misstatement or material misstatement. Or if financial statements are having immaterial misstatement, that can be ignored. Even in that case, we will issue standard worded unmodified report, mean financial statements give true and fair view and are prepared according to accounting standard. Can you understand this? First form of our report is a standard worded unmodified report. Mean you don't need to modify anything, don't need to change anything. Now discuss about modified report. We modify report in two different forms: by qualified opinion or by unqualified opinion with a paragraph. Qualified opinion means if we want to say financial statements do not give trend fair view. This means the standard have mentioned financial statements give trend fair view. We are going to change the wording of standard. So report is modified. That is called modified report with qualified opinion. Qualified means giving opinion against the company. Unqualified opinion means giving opinion in favor of the company. So report can be modified, or report can be modified in two ways. First way, through qualified opinion, we want to express opinion against the company. So in a standard verdict, the opinion wording is financial statements give trend fair view. But we want to say financial statements do not give trend fair view. This means we are going to add do not. We are going to change wording of standard verdict. So report will be modified with qualified opinion. Or the other way of modifying the audit report is unqualified opinion by including a paragraph. What is meant by unqualified opinion? Financial statements give trend fair view and are prepared according to accounting standard. But we want to add a paragraph from ourselves in the audit report. And if we want to add any paragraph in the audit report from ourselves, this means we are changing the standard length from list to this. So report is going to be modified. So audit report can be modified in two ways. One way, we want to express opinion against the company. This means we need to change the standard wording of the opinion. Other way, we are not changing the opinion wording. We are saying financial statements give trend fair view and are prepared according to accounting standard. But we want to add a paragraph in the audit report. If we are going to add paragraph, this means we are going to change the standard length from this to this. So report is going to be modified. And that paragraph we are going to add into the audit report are of two types: emphasis of matter and other matters. In the paragraph, auditor want to add in the audit report are of two types: emphasis of matter paragraph or the matter paragraph. When we gonna add what paragraph, we are going to discuss now. Emphasis of matter. If auditors see there are any matters in the financial statements that are important from shareholder point of view, we want to bring that matter into shareholder attention. Why? Because might be shareholder make his decision by just reading the audit report. He don't read the financial statements. Or might be shareholder don't have knowledge of how to read the financial statements. So we are helping him regarding matters important from shareholder point of view in financial statements, because those matter might influence his decision making, might change his decision making. So we are going to help the shareholder regarding the matter in financial statements which are important from shareholder point of view. So what we will do, we will highlight those matter for the shareholder in the audit report just to help him, so that he should put his attention on those matter of the financial statements because they are fundamental, they are significant, they are important from shareholder point of view. So when we need to add emphasis of matter paragraph in the audit report, when there are some matters in the financial statement that are significant, important from shareholder point of view, and we want to bring those matter into shareholder attention. How we can bring into shareholder attention? By highlighting those matters in the audit report through including emphasis of matter paragraph. Mean through this paragraph, we are emphasizing, mean highlighting any matter of the financial statements. Which matter? That is important from shareholder point of view. What could be the example of emphasis of matter? IAS 1 says If company is having any cash flow or going concern issue, that should be disclosed in the financial statement. As per IAS 1, if company is having any cash flow or going concern issue, that should be disclosed in the financial statements. So companies are having cash flow going concern issues. As per IAS 1, company management have disclosed in the financial statements like companies are having struggling in managing short-term cash flow. But we are hoping in future we will get good order from the customer because we have introduced new products or we are in negotiation with the bank to for the loan. So we will resolve it. As per standard, they have provided the disclosure in the financial statements. This means financial statements give to and fair view and are prepared according to accounting standard. But this matter is important from shareholder point of view. He should not make more investment in the company until this issue resolves. So we will highlight this cash flow issue disclosure for shareholder point of view by including emphasis of matter paragraph. Mean we will say financial statements give true and fair view and are prepared according to accounting standard. But by including emphasis matter paragraph, we will say, please put attention on a note dash in the financial statements of cash flow issue as it can influence your decision. So those matters which are important, which are significant, fundamental from shareholder point of view, and we want to bring those matters into shareholder attention. How? Through audit report, how we can highlight those matter from shareholder point of view in the audit report by including emphasis of matter paragraph. One very important point. When we are including emphasis of matter paragraph, our audit opinion should always be unqualified, mean in favor of the company. If any matter is wrong, misstated in the financial statements, for that we will qualify the opinion. We will not highlight through emphasis of matter. Mean we will highlight only those matters that are correctly presented, disclosed in the financial statement. But they are important from shareholder point of view. We think we should put in shareholder attention. Why? Because might be he take decision by just reading the audit report. He don't read the financial statement. He don't see the financial statements. Or he has no skills, no knowledge how to read the financial statement. So we are highlighting, we are helping shareholder regarding important matter from shareholder part. If there is any matter, we will include this paragraph. If there is no any fundamental matter from shareholder point of view, we will not include this paragraph. I mean, this paragraph is not compulsory. What could be the example? If there is any cash flow or going concern issue that has been disclosed correctly in the financial statements as per standard, so we will highlight by including emphasis of matter paragraph. So audit report can be modified in two ways. One way is through qualified opinion. Other way is by including a paragraph, but the opinion will remain unqualified, meaning in favor of the company. Those paragraphs are of two types: emphasis of matter paragraph and third matter paragraph. When we should use emphasis of matter paragraph to highlight important matter in the financial statements from shareholder point of view. And those matter will be highlighted that are correctly presented, disclosed. We are just highlighting the matter. We are not contradicting with that matter. If that matter is wrongly presented, disclosed, we will not highlight. We will qualify the report. We will say financial statements do not give fair view because this matters is not correctly presented, disclosed. Is it fine? When we should use other matter paragraph. If we want to highlight any matters that are in the financial statements, we will use emphasis of matter paragraph. If auditor want to highlight any matter in the audit report that is not relating to financial statement, we will use other matter paragraph. What could be the example of other matter paragraph? Every year, company prepares their annual reports. Company prepare and issue their annual reports. Where at its AGM. What is in the annual report? There are different components of annual reports. Financial statements are in the annual report. Audit report is in the annual report, as well as some other information. What could be the other information? Chairman or CEO statement. Company chairman and CEO will present their statement in the annual report from how long we are attached with this company and in last year what we have done best for the company. They need to provide their statement in the annual report. Director's statement every director, they have to provide their statement, what they have done in best interest of the company in the last year. If company have performed any social or environmental responsibility, for that company will provide a CSR report, corporate social responsibility report. What a company have done best for the society or the environment, company will write a report and will attach in the annual report. We are the auditor. We need to express opinion on what? Annual report or financial statements. Financial statement, this means we need to audit the financial statement. But this other information in the annual report, what is this called? Other information in the annual report, we need to read or review it, but do not audit. Why we need to read or review it? Just to see whether this other information is consistent with the financial statements or there is any inconsistency. Might be chairman saying in his statement, as compared to previous year, we have doubled the company profits. Double mean increase by 100%. Financial statements are prepared comparative. Comparative mean along with current year figures, there should always be previous year figures. While checking financial statements, we have seen profit has been increased only by 20%. And we verified the financial statements, profit has been increased by 20%. We have evidence through our procedure, profit has been increased by 20%. While chairman saying in his statement, we have increased the profit, double mean 100%. This means this chairman statement is not consistent with the financial statement. He is lying in his statement. We discussed with the chairman. Please don't do like that. Financial statements showing 20% increase. Why you are saying double? Please change that. But he didn't bother to change. This means financial statements give true and fair view and are prepared according to accounting standard. But this chairman statement is not consistent with the financial statement, as he is saying profit has been doubled, while financial statement showing only 20% increase. We should highlight this fact. Where is that issue disclosed in financial statement? No, other than financial statement. So we will highlight by including other matter paragraphs. So when we use other matter paragraph, if other information is not consistent with financial statements, so we need to highlight through other matter. What's the name of the paragraph? Other matter paragraph, to highlight matters other than just statement. If there is any matter in the financial statements, that we will highlight through emphasis of matter paragraph, like cash flow, goings and issue disclosure. And if there is any other matter that is not relating to financial statements, we will highlight because we consider it is important, we should highlight it. How we can highlight? Through other matter paragraph. In company CSR reporting, company have written down, we have made donation charities of 100,000 K dollar during the year. We made some donation charities of 100,000 K dollars. If company have made these donation charities, mean company have paid. This means there should be some expense of donation charity in the financial statement. We checked the financial statements. There is only 20,000 amount rather than 100,000. We checked the cash book, bank statement, invoices, voucher, the amount is 20,000. This means financial statements give 20 if you are prepared according to accounting standard, but the CSR report is not consistent with the financial statements, as companies is saying they have made donation charities of 100,000 while financial statements showing only 20,000 expense. So we will highlight this where by including the matter paragraph in the in the order. Is it fine? So when we should use emphasis of matter to highlight significant matter correctly presented, disclosed in financial statements, but important from shareholder point of view. And we want to put into shareholder attention how we will highlight by including emphasis of matter paragraph. And when we should use other matter paragraph to highlight matters other than financial statements. Like if annual reports, the information in the annual reports is not consistent with the financial statements, we will highlight through other matter paragraph. What could be the other examples of other matter paragraph? Who appointed the auditor? Shareholder. This means our audit report is for shareholder only, or for some other parties as well. Mainly shareholder, but other stakeholder also make decision based on our audit report. If bank want to approve the company loan, he will see audit report whether it's in favor of the company, he will approve the loan. If audit report is not in favor of the company, he will not approve the loan. Bank is also making a decision based on our audit report. If any prospective investor want to make investment in the company, he also using our audit report. Oh, audit report in favor of the company. Okay, this company is good, I can make investment. He made his investment decision based on audit. If creditor want to extend the credit limit for the company, he will also wait for the audit report. If government want to assure whether company has paid the correct amount of tax based on the accounts, how government can assure themselves? Through audit report. If audit report is in favor of the company, this means company have paid correct amount of tax because that is checked by the auditor. This means our audit report is not for shareholder. There are some other stakeholders who are making their decision based on our audit report. If we have said in the audit report, financial statements give to and fair view, different stakeholders have made decision based on our audit opinion. But afterward, our audit work proved negligent. In fact, financial statements were not accurate. This means we have been found guilty. Other stakeholder made their decision based on our audit report, might be they suffer some losses. This means we being auditor need to pay the damages of other stakeholders, not only shareholder, other stakeholder as well. We are not liable towards shareholder only. In case of negligent work, our liability will be towards other stakeholder as well. If we didn't perform the audit carefully, we didn't check the things properly, and we have expressed financial statements given and fair view, investor made decision, banker made decision, but after that, our work proved negligent, when audit opinion was wrong. So we will be liable to pay damages of other stakeholder as well. If auditor want to limit its liability towards a particular stakeholder, like he want to say my audit report is for shareholder only. Other stakeholders should make decision through their own investigation. I will not be liable in future. So auditor can make liability to his make limit to his liability by including other matter paragraph in the audit report. If auditor want to limit his liability towards particular stakeholder, so he will use other matter paragraph. So where other matter paragraph will be used in case of limiting liability towards particular stakeholder. And auditor can make this. Suppose auditor have completed the audit within 1 month. In 1 month, you cannot verify things properly. So might be he's suspicious, might be there is some negligence. So he want to save himself. How he can save? Through damages, future damages by including other matter paragraph in the audit report. Obviously, if you are including this, your repute will be a little bit suspicious. But if auditor want to limit his liability towards particular stakeholder, he can make limit. How? By including other matter paragraph. So when we should use other matter paragraph? To highlight matters other than financial statements, like if other information in the annual report is not consistent with the financial statements, we can highlight through other matter paragraph. If auditor want to limit its liability towards particular stakeholder, we can limit by including other matter paragraph. If auditor is going to audit for any company for the first time, mean previous year you were not the auditor, our previous year financial statements were not audited, you should always highlight this fact in your first audit report by including other matter paragraph. If previous financial statements were not audited, are audited by any other firm, not your firm, he should always include other matter paragraph in his first audit report, like previous year financial statements were not audited, or previous year financial statements were audited by any other firm. We are discussing examples of other matter paragraph. If auditor is asked to provide two reports for the same company, if auditor is asked to provide two reports for the same company, why? Because company have prepared two set of financial statements, two different set of financial statements. Where company prepared two different set of financial statements? In group company, being a parent company, you need to prepare two set of financial statements, one individual financial statements of parent company and one consolidated financial statements by including all the results of subsidiaries. And auditor is going to report on two set of financial statements. He should always use other matter paragraph in both audit report. In individual audit report, he will mention, I have provided opinion on consolidated financial statements of this company. In consolidated report, he will mention, I have provided opinion on individual parent company financial statements as well. So if auditor reporting on two set of financial statements for same company, he need to highlight this fact by including other matter paragraph in the audit report. So we are discussing how many types of audit report. First type of audit report is a standard worded unmodified report. If we want to say financial statements give true and fair view and are prepared according to accounting standard, what we need to do, we need to issue the standard worded as it is without any change, without any modification, just adding the company name, our name, signature, and date. And if we want to modify the audit report, we can modify in two ways: by qualify audit report, qualified opinion, or unqualified opinion by including a paragraph. Mean this will be called unqualified report. With a paragraph. And that paragraph could be emphasis of matter paragraph or other matter paragraph. When we should use emphasis of matter paragraph to highlight matter correctly presented, disclosed in the financial statements, but significant, important from shareholder point of view. So we can bring into shareholder attention by including emphasis of matter paragraph. When we should use other matter paragraph to highlight matter other than financial statements. If other information in the annual report is not consistent with the financial statements, we will highlight through other matter paragraph. If auditor want to limit his liability towards particular stakeholder, he will use other matter paragraph. If previous year financial statements were not audited or audited by any other firm, he will use other matter paragraph. If auditor reporting on two set of financial statements for the same company, he will use other matter paragraph. What is the example of emphasis of matter paragraph? What is the example of emphasis of matter paragraph? To highlight any cash flow disclosure presented in the financial statement. Have we discussed contingent liability? That should be disclosed. Mean if a company need to pay any liability in the future, but there is a not probability, possibility, we need to disclose contingent liability. Any of the customer has made claim against the company about defective products. He used the defective products, he suffered his health, and he has filed a case against the company for damages. There is no probability but possibility. Lawyer says there are 50% chances might be customer will win. If there are more than 50% chances, probability in that case, provision should be created. If there are less than 50% chances, there is possibility. And in that case, contingent liability should be disclosed per IAS 37. So company have disclosed contingent liability in the financial statements as per IAS 37. This means financial statements give trend fair and are prepared according to accounting standard. But we are aware that the customer claim is too high. Customer have made a claim of $100,000. And currently company is having just 5,000 as cash balance. This means if customer will win, company will not be able to pay the amount. Company will become insolvent. There will be serious concern about the company future. Is that matter important from shareholder point of view? Yeah. He should wait until this issue resolved, then he should make further investment if he want to. So we will highlight this through what? Emphasis of matter paragraph. The financial statements give and favor and are prepared according to company standard. But please pay attention on this note as it is important from your part. Is it fine? So what are the examples of emphasis of matter paragraph? To highlight any cash flow disclosure in the financial statements or to highlight any significant contingent liability disclosure. Significant. mean huge amount, big amount. So we have discussed two forms of audit report: standard worded unmodified report and unqualified report with a para. Now discuss about other types where we qualified the opinion. Audit opinion can be qualified in due to two reasons. First reason is a disagreement with the management. And the second reason is a scope limitation. Disagreement with management mean we have identified a misstatement in the financial statements that we have communicated and asked the management to correct it. But they not agreeing with us, they are not correcting in the financial statement. This will be called disagreement with management. I mean, there is a material misstatement in the financial statements that we ask the management to correct, but they are not bothering to correct it. I mean, there is a probability for IAS 37 provision should be created, but they are disclosing as contingent liability. That will be called disagreement with management, mean material misstatement. For IAS 16, assets should be depreciated over their useful life. Management not depreciating the asset, stating on cost basis. What is that? Disagreement with management. For IAS 2, inventory should be recorded lower of cost and NRV. They are recording on higher amount. That is disagreement with management. Mean there is material misstatement in the financial statements that we can prove that for that we have evidence there is misstatement. This means we will qualify the audit report. But we need to see whether that misstatement in the financial statement is material only or material as well as pervasive. What does that mean? Misstatement will be material if it affects only a particular account balance in the financial statement. Mean only sale is overstated, rest of the financial statements are accurate. Only wages are understated, rest of the financial statements are accurate. Only there is a misstatement in inventory, rest of the financial statements are accurate. We will call it material misstatement, not pervasive. Pervasive means there is not a misstatement relating to one account balance. There are so many misstatements. Sales are overstated, wages are understated, inventory is also overstated, assets are also overstated. So we will call it material as well as pervasive. Pervasive mean relating to whole financial statement. Material mean matter relating to particular account balance. If there is a material misstatement not pervasive, in that case, we will issue except for opinion. If there is a misstatement in inventory, only rest of the financial statements are accurate, what we will say, except for inventory, financial statements give transparency. If only wages are understated, rest of the financial statements are accurate, we will say, except for wages, financial statements give transparency. If only assets are overstated due to non-recognition of depreciation, what we will say, except for non-current assets, financial statements give transparency. But if there are problems in so many account balances, sales are overstated, wages are understated, inventory overstated, asset overstated, this means this matter is not relating to particular account balance. Whole financial statements are providing distorted review. Mean matter have been pervade. Pervade mean spread in whole financial statements. In that case, we will issue adverse opinion. What is adverse opinion? Financial statements do not give benefit. What is except for opinion? If there is a misstatement in particular account balance, but rest of the financial statements we have verified are accurate. So we'll say except for inventory, financial statements give transparency. There is a problem only in asset, except for non-current assets, financial statements give transparency. And this is called qualified opinion. qualified report. Mean except for report, other name of except for report is qualified report. While adverse report mean whole financial statements give distorted view, whole financial statements are wrong. So opinion can be qualified in order to express opinion against company due to two reasons. First reason is disagreement with management. Mean there is a material misstatement in the financial statements that we have communicated the management and asked them to change it, correct it, but they are not agreeing with us. This is called material misstatement. We have evidence, we can prove there is material misstatement, but we need to see whether that misstatement is material only or pervasive. If that misstatement is material, we will issue except for opinion. If that misstatement is material as well as pervasive in relating to whole financial statements, we will issue adverse opinion. If there is only one account balance affected, misstatement will be called material. If there are so many account balances are affected, misstatement will be called pervasive. This materiality and pervasiveness is a little bit judgmental as well. If one account balance is affected, misstatement will be called material. Sometimes one account balance even create pervasive effect. Like for a manufacturing company, for retail company, inventory is a major account balance. And if there is about 80-90% overstatement of inventory, then misstatement in inventory will also be called material as well as pervasive. Means this materiality, pervasiveness is a little bit judgmental. It's based on auditor judgment. For service organization, inventory is not a bigger account balance. If there is misstatement in inventory, that will be material only, not pervasive. But for manufacturing retail company, misstatement in inventory, huge misstatement in inventory will be pervasive as well, because inventory is written down in balance sheet, in income statement, in cash flow statement as well. But what is our judgment regarding materiality pervasiveness? If one account balance is affected, the rest of the financial statements are accurate, we will say except for this financial statement give that value. If there are so many material statements, this means whole financial statements are wrong. So in that case, we will issue adverse opinion. But how we can see whether misstatement is material or not? How we can see whether misstatement is material or not? By comparing with company profit. If misstatement is a 5% or more of profit, we will say material. 1% or more of revenue, we will say material. 1% or more of total asset, we will say material. If any misstatement that is not a 5% of profit, mean 3% of profit, 0.7% of revenue, 0.7% of total assets, that will be immaterial. In that case, we will issue standard verdict on modified reports, financial statements, gift and faith. We need to check whether this misstatement is material or not. If it is material, yes, we need to change our opinion. We need to qualify the opinion. If it is material only, not pervasive, in that case, except for opinion called qualified report. So, if that misstatement is material as well as pervasive, we will issue adverse report. What's the name of this report? Adverse report. Now question.
Two questions.
Mm-hmm.
One is, suppose like the assets are not appreciated, then assets will be non-current assets will be wrong, and even the profit will be wrong because the appreciation.
But issue is only one.
Even if it makes, but the issue.
There is issue only one amount of depreciation is not recorded.
Okay.
So we will check materiality of that amount only. If that amount is just 10%, 11% of profit, this means matter is material rather than pervasive. Obviously, there are dual effects.
Yeah.
Expense as well as asset are overstated, but amount is not relating to whole financial statement. It's not affecting whole financial statement. It's affecting a particular part of the financial statement.
Pervasive is also different.
Pervasive means there are so many misstatements.
And qualified and adverse, they're both types.
Qualified mean accept of our opinion.
Yes.
We have discussed two types of audit reports: standard verdict, unmodified report, unqualified report with a paragraph. Third type is called qualified report, and fourth type will be called adverse report. When we will issue adverse report, when there are pervasive misstatement in the financial statement. When we should issue qualified report, there is material misstatement in the financial statements. In both, we are qualifying the opinion. Qualify opinion means giving opinion against company, either relating to particular account balance or relating to whole financial statement. That is a qualified opinion. The word qualified opinion means giving opinion against company.
Oh.
But the type of audit report is qualified report or adverse report. So auditor give opinion against the company due to two reasons. First reason is disagreement with management. I mean, there is material misstatement in the financial statements that we have identified. We have provided evidence to the management and asked them to correct, but they are not agreeing with us. Obviously, we need to give a chance to the management through letter of weaknesses. This is the issue in the financial statements. Please correct like that. And despite giving them chance, they are not correcting. This means now we can fire. How we can fire? Through qualified audit. The second issue, why we are giving opinion against the company is a scope limitation. What is scope limitation? The other name of scope limitation is inability to obtain sufficient appropriate audit evidence. We have learned for ISA 500 audit evidence, an auditor should obtain sufficient appropriate audit evidence before expressing the opinion. But there could be some issues, might be we are unable to obtain evidence. Why? Management is not giving us access to the records. If we don't have access, we cannot perform procedure to take evidence. We need some information from the management as evidence, but they are not providing that information. Or might be records are not available due to some genuine reason. Accounting records have been destroyed due to fire. Accounting records have been destroyed due to flood. Any of the employees stolen the accounting records. Our company was maintaining accounting records in our computer system and computer system crashed. If records are not there due to genuine reason, our management not allowing us to access records, this means we are unable to perform procedures. If we are unable to perform procedure, we are not having the evidence. That will be called scope limitation. I mean, there is a limitation on our scope of work. What is our scope of work? To obtain evidence, we need to perform procedures. We need to ask information from the management, but either they are not providing information, they are not allowing access to records, or not records are not available. So this will be called inability to obtain evidence. In that case, we need to see whether we are unable to obtain evidence of material nature or pervasive nature. If only inventory record has been destroyed by fire, the rest financial statements record were available and we have verified. What we will say, except for inventory, financial statements, gift and failure. Only the wages record has been destroyed. The rest financial statements we have verified. What we will say, there is a material scope limitation. So except for wages, financial statements, gift and failure. If we were unable to verify anything in the financial statement because the whole system crashed, this means the scope limitation is pervasive, relating to whole financial statements. In that case, we will issue Disclaimer of opinion. Disclaimer opinion means we do not express any opinion. Why? We haven't verified anything. We can see this thing is right or wrong based on the evidence. If there are no evidence, we need to keep our mouth shut. But we will say, we do not express any opinion. Disclaimer opinion. Disclaimer means we are disclaiming from the opinion. We are not providing any opinion. If we have verified few things, but few things not verified, and that are of material nature, we will say, except for this, financial statements give and fair. So this will be called a qualified report. And this will be called disclaimer report. There are 5 types of audit report. First one is a standard worded unmodified report. When we want to express opinion in favor of the company, we want to say financial statements give and fair and are prepared according to accounting standard. Second one, unqualified report with a paragraph. When we want to add something in the audit report, but we can add either in phases of matter to highlight matters relating to financial statements or other matters other than financial statements. Third form is qualified report due to material misstatement or material scope limitation. Qualified report due to material misstatement or material scope limitation, and in that qualified report we issue except for opinion. Fourth one is adverse report due to pervasive misstatement. Obviously, so many material misstatement will be combined together to become pervasive. And fifth form is called disclaimer report when there is pervasive nature scope limitation. Mean we unable to verify anything relating to financial statements because whole system crashed. There was no record available to verify. Our management not providing us access to the records. Standard worded unmodified report. Second, unqualified report with a paragraph. Third, qualified report due to material misstatement or material scope limitation. Fourth, adverse report in case of pervasive misstatement in the financial statement. Fifth one, disclaimer report. When we should issue disclaimer report? When there is pervasive inability to obtain evidence. Is that fine? So there are 5 types of audit report. When we should issue what kind of report we have discussed. We have discussed what are the examples of in phases of matter paragraph, and we have discussed what are the examples of other matter paragraph. What are the examples of other matter paragraph? If other information in the annual report is not consistent with the financial statements, if auditor want to limit his liability towards particular stakeholders, if previous financial statements were not audited or audited by any other firm, if auditor reporting on 2 set of financial statements for the same company, he should always highlight through the matter paragraph in both audit report. Okay, let's move. Now we are going to discuss what is in the audit report. What are the contents of audit report? The first content of audit report is called the title of the report. Title as well as addressee. What is the title or addressee of the audit report? Always audit report title is independent auditor report to shareholder of ABC company. What is the title? Independent auditors report. And to whom auditor address his report? To shareholder or to members of a company. Like independent auditors report to shareholder of a GPS company. Mean in addressee, we need to mention for which a company shareholder. Mean we will highlight the name of the company as well. This is first content. The second content of audit report is opinion paragraph, where auditor express the opinion whether financial statements give to and fair view or do not give to and fair view. How auditor express financial statements present fairly in all material respects. Mean there is no material misstatement. And in accordance with AFRF, AFRF stands for applicable financial reporting framework. Mean IES, IFRS. Our auditors say financial statements give true and fair view and are prepared in accordance with AFRF. Mean financial statements present fairly in all material respect. Financial statements give true and fair view. Both phrases having same meaning. Mean there are no material misstatement in the financial statement. And in this paragraph, auditor also provide an introduction of the company as well. Company name, year end, and name of financial statements components that auditor has audited. What are the components of financial statements? Statement of comprehensive income, statement of financial position, statement of cash flow, statement of changes in equity, and notes to the accounts. Auditor will provide the name of all the components of financial statements under opinion paragraph that he has audited. He will provide the name of the company and its year end, and he will express opinion. How? Like this. We have audited the financial statements of ABC company, which comprises the statement of financial position as at that date, and the statement of comprehensive income, statement of changes in equity, statement of cash flow, and notes to the financial statements, including summary of significant accounting policies. I mean, first he will provide introduction about company name, its year end, and the components of financial statements he has audited. In our opinion, the accompanying financial statements present fairly in all material respects or give a true and fair view of the financial position of the company at that date, and its financial performance is cash flow for the year ended in accordance with IFRS. You don't need to learn the wording, but you should be familiar what is in opinion paragraph. Examiner could ask like whether this information should be included in this paragraph or this paragraph. There are different paragraphs in audit report. We are going to discuss about that. So first content is independent auditors report to shareholder of ABC company, mean title and addressee. And then there is opinion paragraph. The next content will be called basis for opinion paragraph. In this paragraph, auditor will say, I have performed work as per ISAs. Mean audit was conducted as per ISAs. Auditor will say, I have maintained my independence throughout the audit. Mean I have followed ethical requirements. And based on sufficient appropriate evidence, I have expressed the opinion. Mean auditor will highlight three things. Work performed as per ISAs. Auditor have maintained independence or meet ethical requirement. Mean he has followed codes of ethics. And auditor has obtained sufficient appropriate audit evidence. Mean audit opinion is based on audit evidence obtained. But if you are going to express qualified opinion, adverse opinion, or disclaimer opinion, along with these 3 points, auditor have to explain the matter against which he has expressing qualified, adverse, or disclaimer of opinion. We need to explain the matter. If we are saying except for inventory, financial statements, gift and fair view, what is the problem in inventory? We need to explain in basis for opinion paragraph. Not only the matter we need to explain, we need to explain if there is any accounting standard contradiction. So what accounting standard says and what a company have done. I mean, if inventory is wrong, we will say as per IAS2 inventory should be recorded lower of cost NRV. And this is the cost, this was the NRV, and management have recorded on higher. If there is any misstatement relating to amount, we need to provide the amount, mean quantification of a misstatement we need to provide in this paragraph. Mean what amount misstatement is there. How we treated the matter as material or pervasive, we need to explain as well. I mean, if we are going to express qualified report, why this matter is material, not pervasive, we need to explain. I mean, why it is material, how much percentage of profit or revenue. Or if we are going to express adverse opinion, what are the matters why you consider them pervasive rather than material only? We need to explain, we need to provide justification of materiality or pervasiveness as well. If we are providing unqualified opinion, then these things will not be required. Then only these 3 things we need to state. But in case of qualified adverse opinion, along with these 3, we need to explain the matter, the issue. If there is any non-compliance with accounting standard, we need to state the accounting standard, what accounting standard says. We need to provide the amount of misstatement. And we need to provide justification how we consider the amount as material or pervasive. Is that fine? If we are expressing unqualified opinion, means standard report, this paragraph heading will be auditor's opinion and this paragraph heading will be basis for opinion. But if we are going to issue except for opinion, mean qualified report, this opinion paragraph heading will be qualified opinion. Or if we are going to express adverse report, this paragraph heading will be adverse opinion. Or if we are going to express a disclaimer report, this paragraph heading will be disclaimer of opinion. And this paragraph heading will also be changed basis for qualified opinion, basis for adverse opinion, or basis for disclaimer of opinion. In case of unqualified opinion, the heading will remain same. But if you are going to express qualified opinion, qualified report, the paragraph heading will be changed. Qualified opinion, adverse opinion, or disclaimer of opinion, as well as basis for opinion paragraph heading will also be changed, like basis for qualified opinion, basis for disclaimer of opinion, or basis for adverse opinion. Is that fine? So we are discussing about contents of audit. Title addressing, opinion paragraph, basis for opinion paragraph.
Can you repeat for unqualified or what is the change?
If we are expressing unqualified opinion, this paragraph heading will be auditor's opinion and basis for opinion. But if we are going to issue qualified report, except for, the opinion paragraph heading will be qualified opinion. Instead of this, qualified opinion. and this basis for qualified opinion. In case of adverse report, adverse opinion, basis for adverse opinion. In case of disclaimer report, the heading will be disclaimer opinion and basis for disclaimer opinion. After basis for opinion paragraph, there will be a paragraph called key audit matter. I am leaving these two now. Key audit matter. After basis for opinion, there will be a paragraph called key audit matter. What does mean by key audit matter? Forget about these two. We'll discuss later on.
Oh, this
After basis for opinion, what's the paragraph name? Key audit matter. What does mean by key? What does mean by key? Important, fundamental, significant. Key audit matter. What does that mean? Matter important from audit point of view. Key audit matter mean matter important from audit point of view. Matter important from audit point of view mean those matter where we have performed procedure in more detail, where we have spent too much time during the audit, where we have performed too much checking during the audit. We need to highlight those matters in the audit report under the section key audit matter. What could be key audit matter? What could be key audit matter? High risky areas where we have performed more substantive procedure in detailed substantive procedure, or highly material areas, material account balance. Are areas where management judgment and estimates are involved. Because if there is any figure based on management judgment estimate, there are always chances of high risk. Depreciation, amount of provision. So areas where management judgment or estimate involved are called key audit matter. In matter from audit point of view, where we have spent too much work, where we have performed more detailed substantive procedure are called key audit matter. We need to highlight those matters in the audit report under the paragraph key audit matter can. What we need to highlight? We need to highlight the matter heading as well as we need to explain why it is CAP. Either it was high risky, either it is material or involving matter of management judgment. So we need to provide the heading. We need to explain why CAM. And we need to briefly describe our audit approach as well. I mean, how we have audited this matter during the audit. How we have checked this matter during the audit. Suppose there was a matter, high risky area, what could be the provision? So you put the heading provision. In one line, we'll explain as it was assessed as a high risky at the planning stage. So that's why we consider it as CAN. And then we will explain our brief audit reports, mean how we have verified them. Where in key audit matter section of audit report. Key audit matter paragraph in the audit report. Why we should provide a CAM? Mean what are the benefits of CAM? What will be the objectives of CAM? Purpose of CAM? Why? To show more transparency about audit work. Through this, we can improve audit quality as well. Because if auditor are aware, like I need to explain key audit matter in the audit report along with audit approach, this means I should give a good impression to the public by adopting a proper audit approach. So auditor will adopt a proper audit approach, mean he will check those things properly, and through this audit quality can be improved. No CAM where CAM is not necessary. CAM paragraph is necessary for listed audit company audit report. Unlisted company, no need to provide CAM in the audit report. Mean we can omit this paragraph from the audit report for unlisted company. If we are providing qualified report, not qualified, you can say adverse report or disclaimer report. In adverse, what you are saying, whole financial statements are wrong.
There is no event.
There is no key audit matter. We do not express any opinion. There is no key audit matter. So key audit matter section will not be there in adverse or disclaimer report. For small companies, having minimal account balances, so there will be no key audit matter. So what are the CAMs? High risk areas, material account balances, areas where management judgment estimate is involved. What we need to state under CAM heading, mean matter heading, brief detail why we have considered CAM, and brief audit approach. Why we need to provide CAM? What are the benefits or objective? Through this, auditor can meet transparency, mean provide more detail to the stakeholder regarding his audit approach, and through this auditor quality can be improved. And where CAM should be eliminated from the audit report, for unlisted company there is no requirement of CAM. If auditor have issued adverse or disclaimer report, there is no need for CAM. And for small company having minimal account balances, there is no need for CAM. One thing more, if we have issued qualified report, mean except for inventory, financial statements, gift and fair view. What's the issue in inventory? Where we will explain basis for opinion paragraph. Obviously, inventory, if there is misstatement, we have verified it in more detail. From audit point of view, it is a key. But if we have explained the issue in basis for opinion paragraph, we don't need to repeat in CAT. If there is any other matter except inventory, we should include. Otherwise, we will say there is no other matter. There is no key audit matter except for explained in basis for opinion paragraphs. In those matters that have been highlighted in basis for opinion paragraph will not be repeated in CAM. And CAM, key audit matter, is different than emphasis of matter. Emphasis of matter is important matter from shareholder point of view, while key audit matter, important matter from auditor point of view. Key audit matter is compulsory. Emphasis of matter is optional, not compulsory component of audit report. In key audit matter, we highlight the matter as well as audit approach. While in emphasis matter, we just highlight the matter, we don't need to explain audit. And emphasis matter, matter important from shareholder point of view. While CAM, key audit matter, matter important from auditor point of view. If anything has been explained in emphasis of matter, we should not repeat in CAM. If anything has been explained in basis for opinion paragraph, we should not repeat in CAM. If any matter relating to other matter paragraph, we have included other matter paragraph, we should not repeat that matter in CAM. Is that fine? And CAM is a compulsory component of audit. We are discussing compulsory component. Independent auditor report to shareholder mean title addressing is compulsory component. Opinion paragraph is compulsory component. Basis for opinion is compulsory component, and key audit matter is a compulsory component. What are the other components? Let's take a small break. We will discuss after the break. Absorb these things first. There will be no CAM if you have qualified the audit report and there is no other matter except that has been explained in basis for opinion paragraph. There will be no CAM. We will say in CAM there is no key audit matter except explained in basis for opinion paragraph.
You want to focus on the service experience. Yeah, after my bachelor's degree, they want, I don't know. Six, 6 kilometers. 3 more. More than association. So I did BT and law on the own, like for one session for BT, one session for law. So again, I was busy. For BT, I wasn't busy. It's just, you know, so it sounded like a culture shock. Right. So I was homeschooled for 2 years. So basically doing nothing when you're homeschooled. So if you go take FAMA BT, I think it's like a good transition from doing nothing. So usually I started studying and June and August I did BT. Then September I did MA. And then I finished studying for FA in December or November actually. But then I had a break, it's like a month, so I finished that in oh, okay. Last month. Okay, okay, okay. So you didn't take them in like 3 year increments. How many 3 month increments? Like 2 months, yeah, 1 month. One side, sort of. Makes sense. So you're still gonna attend GBS next session? No? Probably not. I'll see. It depends on what paper I'm doing, what papers are available, and what papers I take to. I can't figure you go sessions. Yeah, I mean, I want to do for or law. I might do law. I should not know. Next week was in June. Next session like March, March, yeah, June, March, June, September, December. Yeah, actually. I have plans for that game. It's my college exams and at the beginning of May. So I do like I follow that. Um, we're gonna do law, right? We're gonna do law 7 the first time next years. What to do? I could either do law in June. Wait, wait, wait. You don't know. So I wrote after this. Then you want 2 papers from that far or just that far? In September, I'll probably do that far. And one portion shape. So if you're doing September, if you fail, you can do it again with the same portion. Otherwise, you'll have to suppose I do it in June. And I failed that. I'll have to relearn a lot of stuff because I changed by the time you do this. Ah, okay. Well, I think that goes with every paper, no? No, but especially that it's because after there's elections, policies and because it's like current tax. Yeah. No, auditing will remain auditing. I'll only take one next session again, because I'll be starting my God willing, I'll be starting my driving lessons. So they'll yeah, take start that soon as well. Yeah. For you, I think it's hard because you have college. Your other unions. Yeah. And people simply just,
If I pass, of course, it's just one. If I don't pass,
no, you're fine.
God forbid, if I don't pass,
Still fine.
yeah.
Driving isn't that like driving skills,
Yeah, but like sometimes it's a trick. For example, they say the Saturday, Sunday, Friday, sometimes is
Yeah.
but you can between those days you can choose.
They give you like a number of hours that you have kind of in a week and you can choose the day where.
Yes.
So we were discussing about elements of audit report. Title addressing, opinion paragraph, basis for opinion, key audit matter. After key audit matter, there is a paragraph called other information. Other information paragraph. We discussed some examples of other matter paragraph. If other information is not consistent with the financial statements, we need to highlight through other matter paragraph. If auditor want to limit liability towards particular stakeholder, he can limit by including other matter paragraph. If previous financial statements were not audited or audited by any other firm, we need to highlight in our first audit report through other matter paragraph. And if auditor reporting on two set of financial statements for the same company, he need to highlight through other matter paragraph. This first example is eliminated from other matter paragraph now. 5 years back, the inconsistency between other information and financial statements highlighted through other matter paragraph. But now, for this inconsistency highlighting, we need to use other information paragraph in the audit. The remaining three examples are of other matter paragraph. Mean we will use other matter paragraph for these three matters. But to highlight any inconsistency between financial statements and other information, now we will use other information paragraph rather than other matter paragraph. Mean for this example, we will use other information paragraph in the audit report. In 5 years back, the audit report contents have been changed. And they included an other component of audit report, that is the information paragraph. In this other information, we will highlight if there is any inconsistency with the financial statement. Even other information are correct, we still need to use this paragraph to say there is no material misstatement in other information. If other information is not consistent with the financial statement, we will say there is material misstatement in other information. What is that misstatement? We need to explain that, like directors saying financial statements profit has been doubled, while financial statements showing only 20% increase in profit. And along with other information detail, we need to explain to read this other information is our responsibility, but do not audit. And if we are not expressing opinion on other information, our audit opinion is on financial statement. But if other information is accurate, we will say there is no material misstatement in other information. If other information is wrong, we will say there is a material misstatement in other information. Mean out of those 4 examples of other matter paragraph, the first example will be used in other information paragraph. For remaining 3, we will use other matter paragraph. Then there will be a paragraph called management responsibility paragraph, where we explain what are the responsibilities of company management. Financial statements preparation according to standard is the responsibility of company management. internal control system implementation is the responsibility of company management. Providing access to records and information for audit purpose to auditor is the responsibility of company management. Why we are including this in audit report? Management responsibility paragraph. Why we are including in audit report? To avoid expectation gap. What is expectation gap? Expectation gap means difference between perception and auditors' true responsibilities. Public perceive that auditor prepare financial statements. Public perceive that auditor implement internal control system. No. Who prepare financial statements? Company management. Who implement internal control system in the company to prevent fraud and errors? Company management. So this public perception we are going to clear by including this management responsibility paragraph. Then we need to include auditor's responsibility paragraph. In auditor responsibility paragraph, auditor will explain his responsibilities. What is auditor responsibility? To express opinion on the financial statements. What is auditor responsibility? To perform work as per ISA's mean auditing standards. If auditor is expressing opinion, he is not expressing guarantee. He is providing assurance, and that assurance is also reasonable, mean less than 100%. Again, this is to avoid expectation gap. Public perceive if auditor expressing any opinion, he is providing guarantee? No. Public perceive auditor obtain 100% evidence. No, auditor obtains sufficient appropriate audit evidence based on sample work rather than 100% testing. So we explain our responsibility in auditor's responsibility paragraph, like we provide reasonable assurance, we performed work as per ISAs, and we obtain sufficient appropriate audit evidence. And we plan our work first, then we will perform. We also evaluate internal control system. We also evaluate management estimate and judgment to see whether they are reasonable or not. After auditor responsibility, there will be a paragraph called other reporting responsibility. Other reporting responsibility means in some countries, country laws says auditor need to highlight these things in the audit report. If any country law saying you need to highlight anything in the audit report, where you will highlight in other reporting responsibilities. If there is no requirement from the law, this paragraph will not be there. Like in some countries law, state auditor need to highlight whether company have maintained books of accounts or not. Whether company prepare financial statements as per maintained books of accounts or not, you need to highlight in the audit report. So we will highlight under this other reporting responsibility paragraph. And then there will be name signature of auditor. Whose name signature will be there? Who is the leader of auditor team? Engagement partner. We need to provide a auditor address, mean firm name and address, and a date the audit report is assigned. And this date should always be after the approval of financial statements. Who prepare financial statements? Company management. After preparing, they approve of financial statements for issue. So this audit report date should also be after the date of approval of financial statements because audit report is on financial statements. This date should not be before the approval of financial statement date. So one day director approved financial statements means signed financial statements for issue, and the next day we will sign the audit report. So what are the contents? Title addressee, opinion, basis for opinion, key audit matter, other information, management responsibility, auditor's responsibility, other reporting responsibilities, auditor's name, signature, address, and date. Who will sign the audit report? Engagement partner. Though audit report is from the firm, but any person has to sign it. Who will sign? Engagement partner, the leader of the audit team. So these are the contents of standard worded unmodified report. What are the contents of qualified report? Same, only the heading of opinion and basis of opinion will be changed. What are the contents of adverse report? Same, only the heading of basis for opinion paragraph will be changed. If we want to include emphasis of matter paragraph in the audit report, where it should be placed? It should be placed before CAM and after basis for opinion paragraph. Where emphasis of matter paragraph should be included in the audit report if we want to highlight any financial statement matter for shareholder. So how we can highlight? By including emphasis of matter paragraph. Where it should be placed? Before CAM, after basis for opinion. If we want to include other matter paragraph, it should be after CAM. Anywhere after CAM, better if you can provide at the end. But if you want to include both emphasis of matter and other matter, when you want to highlight some issues of financial statements, some other issues you also want to highlight, you want to include both emphasis of matter, other matter, then both will come together. Either both before CAM or both after CAM. Then you cannot include emphasis matter before CAM, other matter after CAM. No, both will come together either before CAM or after CAM. If only emphasis matter, that should be placed before CAM. If only other matter, that should be placed after CAM. Is that fine? So we have discussed different types of audit report. In what situation, what kind of report will be issued? How many types of audit report are there? We have discussed about examples of emphasis of matter paragraph. We have discussed about examples of other matter paragraph. That is separate topic. We will learn, then we will discuss that going concern paragraph. It's optional, not compulsory. It's optional, not compulsory. So let's move forward. The audit report look like this. This is the title, addressee, opinion paragraph, basis for opinion paragraph, key audit matter paragraph, management responsibility paragraph, auditor responsibility paragraph, other reporting requirement paragraph, and auditor name, signature, and date. What is CAM? Key audit matter. Could be area of high risk of material misstatement, areas of involving a significant judgment, estimate of company management, effect of significant event or transactions which occurring during the year mean could be bigger event. Could be some complex account balances, Complex account balances mean whose calculation is more complex. Like for manufacturing company, inventory calculation is complex because it involves material, work in process, finished goods, costing method based on ABC, absorption, marginal. So that is complex area. And extent of specialized skill or knowledge or any account balance where we use the expert. Why we use the expert? Because that account balance was material. So that will also be called CAM, key audit matter. Example could be valuation of impairment of goodwill. Mean if company has created asset as goodwill, especially in group company, land and building investment carried at revalued amount if company recording asset on revaluation basis. And revaluation basis based on judgment estimate. Deferred tax asset liability. There is a new change in accounting policy. And due to change in policy, there are significant effect on the financial statement. Research and development cost. Significant change in business entity like a business have acquired any subsidiary during the year. Or valuation of specialized inventory where we use the expert. What could be the purpose of CAM? The purpose of CAM is to enhance transparency as well as providing more information to the user of audit report. We need to provide the heading. We need to explain why it is a CAM, and we need to address our brief audit approach. Where CAM should not be provided, we have discussed. Modification to the opinion. What is a modified opinion? Providing opinion against the company. Mean qualified opinion, either qualified, adverse, or disclaimer. What is meant by immaterial? The item which is not material, meaning which is not affecting decision of user. What is meant by material? Those misstatements that affect the user. Pervasive is used to describe effect of misstatement or scope limitation. Pervasive effect on financial statements are those that in auditor judgment are not confined to specific account balance. If so confined, represent a substantial portion of financial statements, mean affecting whole financial statements in relation to disclosure are fundamental to user understanding. If there is a material misstatement, we will issue qualified report. If there is a pervasive misstatement, we will issue adverse report. And in case of scope limitation, if there is a material nature scope limitation, qualified report. And if there is pervasive nature scope limitation, disclaimer report. Nature of material misstatement other than amount. Appropriateness of selected accounting policy if company is not adopting accounting policy properly, that would also be material misstatement. Application of selected accounting policies, like management have changed any policy to distort view of financial statements, that will also be material misstatement. Inappropriateness of adequacy of disclosure if standard require any disclosure in the financial statement. And management not providing those disclosures, that will also be called material misstatement. Scope limitation could be due to circumstances beyond the control of the entity, like car destroyed by a flood, by fire, any employee stolen the record, company were maintaining computerized record and computer system crashed. Are circumstances relating to nature or timing of the auditor work. Mean auditor was appointed after the year end. And company count his inventory at year end. can auditor verify inventory properly? No. He asks the management to count again. They say, no, 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 this is very difficult task. We cannot count again. So this will be scope limitation. We are unable to verify inventory quantity. Are limitation imposed by management or management not providing you access to record or providing information relating to audit? So this is a scope limitation imposed by the management. You request it, but they are not helping you. And in case there is scope limitation, material nature, we will provide qualified opinion. If there is a pervasive nature scope limitation, we will move towards disclaimer of opinion. Examples of emphasis of matter paragraph. If there is exceptional litigation or regulatory action pending against company, mean company is facing any litigation from any client, any customer, or any of the employee who has been dismissed unfairly. This means there are chances company need to pay to them. And in case of possibility, if company have disclosed contingent liability disclosure, we will highlight through emphasis of matter paragraph. Early application of new accounting standard. IFAC has introduced new accounting standard that might be applicable after 2 years. But company have adopted it now. Might be adopting those accounting standard will overstate income, assets. So these things are also important from shareholder point of view. So we will highlight through emphasis of matter paragraph. When a major disaster significantly affect entity's financial position, I mean after year end, before issuing audit report, there was a post balance sheet non-adjusting event, mean any of the asset destroyed due to fire. If there is any post balance sheet non-adjusting events that must be disclosed in the financial statements per IAS and events after reporting period. And if management has disclosed, being auditor, we will highlight that disclosure through emphasis of matter paragraph. That is any significant disaster after year end. A significant subsequent event occurs. Subsequent event means destroyed production asset, non-adjusting event. Financial statements and audit report are revised after issuance. This we will discuss in next lecture. How financial statements and audit report will be revised. In that case, we need to include emphasis matter paragraph as well. Where emphasis matter paragraph should be included in the audit report before CAM and after basis or opinion. What are the examples of other matter paragraph when financial statements of prior period were not audited or audited by any other firm? When auditor report on more than one set of financial statements for the same company? And when auditor want to limit its liability towards particular stakeholder? And where it should be provided in the audit report after CAM. State how you would deal with the following situation in the audit report of the companies. Can you read 1, 2, 3, 4 and just highlight what kind of audit report should be issued? Number one, qualified with except for the balance sheet of diamond merchant include an amount due from Canadian customer which is material in the light of a result for the year. I mean, there is a receivable in the financial statement that is material from financial point of view. And the balance sheet figure, the directors believe that the debt will be recovered in full. And the accounts have been drawn up on that basis. However, the auditor is firmly of the opinion, mean having evidence, that full provision should be made for the debt, mean will not be recovered. So there is disagreement due to material misstatement in the financial statements. So qualified report with except for opinion must be issued. And the reason behind qualifying the report must be explained in basis for opinion paragraph. Number two, in the accounts of shoe manufacturer, the directors do not provide for depreciation of the freehold factory, which is included in the balance sheet at cost. So this is non-compliance with IAS 16 property, plant and equipment. The depreciation charge is based on 50-year life would be material. So there is a material misstatement as well. Qualified report. Number three. The financial statements of wine and spirit merchant include a number of significant amounts which are based on estimates. Because as stated in our notes of the accounts, a fire at the company computer center destroyed many of accounting records. Due to scope limitation, inability to obtain sufficient appropriate audit evidence, qualified if there is material scope limitation or adverse, many of accounting records not relating to single account balance, disclaimer of opinion. Many of accounting records. Because company whole computer system destroyed. And if they are maintaining accounting records in computer, so nothing will be checked. Because there will be nothing manual to verify. The accounts of transport company do not reveal that a bridging loan of 30,000 was made to director during the year. For IAS 1, director transaction should be disclosed in the financial statements. Director obtained a loan from the company, and there is a transaction, there must be a disclosure, but they didn't disclose. The loan was repaid within 6 weeks. Though repaid, but per standard, it should be disclosed. If you are not providing disclosure, there is a non-compliance of accounting standard. So material misstatement, qualified report with except for due to material misstatement. Is that fine? So let's discuss some accounting standards. ISA 720 other information says, being auditor, we need to take evidence of financial statements. We need to perform procedure on financial statements, but it is our duty to read or review other information in the annual report as well. Why? To see if there is any inconsistency. If there is any consistency or there is no inconsistency, we need to highlight through other information paragraph. We need to highlight through other information paragraph, not other matter. Following the CAM should be inserted. If in extreme circumstances, if the other information is seriously misleading or inconsistent, And the director refused to amend it. Mean we asked the director, please change this. It doesn't look nice. Please change it because financial statement is showing something different. But they refuse to change. The auditor must consider resignation. Resignation. Why? Because management integrity is doubtful. He lost confidence on management integrity. Instead, we should highlight through the information paragraph. We should resign from the audit because if we are highlighting them, this is inconsistent, this is not true, and they are not bothering to correct this means management integrity is doubtful. There might be the evidence they have provided relating to financial statements, whether they are genuine or not. So we should not associate our report to wrong people, to corrupt people. But before resignation, we need to take legal advice, mean consult the lawyer, whether we will be able to recover our fee or not. So let's discuss another auditing standard, that is going concern. Going concern. We need to learn some management responsibility regarding going concern. We need to learn some auditor's responsibility regarding going concern. Who should prepare financial statements? Management. IAS work requires company management need to assess the company ability to continue as a going concern. Mean they need to see whether company is a going concern or not. What is meant by going concern?
Can last.
Company will continue its business in next foreseeable future. Foreseeable future mean next at least 12 months. So before preparing the financial statements, management need to see whether company is going concern or not. Mean management need to assess company's ability to continue as a going concern. If company is going concern, they need to prepare financial statements on going concern basis. Management need to prepare financial statements on going concern basis if company is going concern. Mean prepare normal financial statements. But prepare financial statements on breakup basis. If company is not going concern. Breakup basis is also called liquidation basis. Also called realization basis. If company is going concern, they need to prepare financial statements on going concern basis. Mean normal. But if company is not going concern, mean company will finish within 12 months. Will stop its business within 12 months when company is not going concern. In that case, they need to prepare financial statements on breakup basis, realization basis, or liquidation basis. What does that mean? To show all non-current assets as current because company will shut down its operation within 12 months. So non-current assets will not continue more than 1 year. So they need to show all non-current assets as current. They show all liabilities under current liabilities. means because they need to settle down within 1 year. That is called breakup basis, liquidation basis, or realization basis. If company is having cash flow issues, it must be disclosed in financial statement. Mean company is going concern, but it is having cash flow issue that will be resolved, but company will continue more than 12 months. So those cash flow issues must be disclosed in the financial statements as per IAS 1. And for cash flow issues, there is a term called material uncertainty. Cash flow issue. The other name of cash flow issue is material uncertainty. So if company is going concern, financial statements should be prepared on going concern basis. If company is not going concern, financial statement should be prepared on breakup basis. But if there is any cash flow issue, mean material uncertainty, there should be a disclosure in the financial statements. Whose responsibility is that? Company managers. What is the auditor responsibility? He need to assess the company management. He need to evaluate the company management assessment of going concern. Who should assess the going concern? Company management. Auditor need to evaluate management assessment. Like if management assessment saying company is going concern, auditor need to evaluate whether in fact the company is going concern. If management assessment saying company is not going concern, auditor need to evaluate whether company in fact is not going concern. If management assessment showing company is going concern but having cash flow issue, auditor need to evaluate whether there in reality only a cash flow issue rather than going concern issue. In auditor need to evaluate management assessment of going concern. And if auditor is having any doubts about the company going concern, then auditor need to perform some procedures. What are the procedures that auditor need to perform regarding going concern? When auditor is having doubt, company will shut down during 12 months, but management saying company is going concern. So auditor need to clear his mind by applying some procedure relating to going concern. Auditor need to analyze cash and profit forecast for next 12 months. Auditor need to analyze cash and profit forecast for next 12 months, mean he will ask management, please prepare your next 12 months forecast. Auditor will see whether through those forecast company having a chances of recovery in cash and profit or not. Auditor need to analyze latest interim financial statements, mean half months financial statements if management have prepared, because through this auditor will be able to check whether company will survive or not. If company management is saying, no, we are having discussion with the bank will provide us a loan, we can resolve our issue, auditor need to read the terms of loan agreement as well. If company is having issue, auditor is having doubt about it, auditor need to read minutes of a shareholder and directors meeting, mean how management discussing about the issue.
TCWG.
TCWG, those chart with the governance, mean meeting of management. Because if company is having issue, they will discuss in their meeting how we can resolve or not resolve. And by reading the minutes of those meeting, auditor will be able to identify whether management discussing showing any recovery or not. If there is any court case going against the company, and those are significant, we need to consult the lawyers of the company, how much the chances of those cases against the company are in favor of the company. Because if those against the company chances are high, this can affect a company going concern. We need to see whether company is having a bigger order from the customer or not. These are not required. That's it. Meaning if auditor is having concern about going concern, he need to see cash and profit projection forecast. He need to check interim accounts. He need to read loan agreement. He need to read minutes of meeting of directors. He need to consult lawyers in case of cases against the company, and he need to see whether company is having a bigger customer order through order book or not. And through these, auditor will be able to identify whether company is going concern or not. What are the implication of audit report? Company is not going concern. The use of going concern basis of accounting is not appropriate. In simple word, company is not going concern. And if financial statements are prepared on going concern basis, what kind of opinion or report auditor should express? Company is not going concern. Financial statements should be prepared on breakup basis. No, management have prepared financial statements on going concern basis. This means whole financial statements are wrong. Adverse report. Can we discuss here instead of this? Let's discuss here. I'm making 3 columns. Here we will discuss about company. Here we will discuss about the financial statements. And here we will discuss about audit report. So I'm discussing first scenario. Company is a going concern. Financial statements prepared on going concern basis. What should be your audit report? Company is going concern. Financial statements prepared on going concern basis, whether they prepare accurate or wrong. So what we will provide standard verdict, unmodified report, mean everything is okay. Now moving towards another scenario. Company is not going concern. Financial statements prepared on going concern basis. What should be the audit report? Adverse, because whole financial statements are wrong. Company is not going concern. Financial statements prepared on breakup basis. What should be your opinion? What should be your opinion? Company is not going concern. So financial statements should be prepared on breakup basis. Company have prepared on breakup basis. So opinion will be unqualified. Mean in favor of the company, financial statements give true and fair view and prepared as per accounting standard. But we need to highlight these financial statements have been prepared on breakup basis. How? With emphasis of matter paragraph. Can you understand this? Now, very important. Company is having cash flow issue, mean material uncertainty. Company is not going concern.
If company is
Wrong adverse. And that will be stupid company. If company is going concern, they are prepared on breakup basis. Okay. The issue is that companies having cash flow issue mean material uncertainty existed. IS 1 says if there is any material uncertainty, mean cash flow issue, you need to disclose in the financial statements. So financial statements prepared on going concern basis with a disclosure. Mean management have disclosed in the financial statements. Financial statements are accurate. So unqualified opinion is that disclosure is important for shareholder point of view. Yes. They need to wait to resolve this issue. Then they should make further investment decision. How we can highlight financial statements matter for shareholder point of view? To this emphasis matter paragraph. But here we will not use emphasis matter paragraph. In this case, we will include a new paragraph in the audit report called material uncertainty relating to going concern. Material uncertainty relating to going concern paragraph will be included in the audit report. After basis for opinion, before CAM, where emphasis matter is placed. Only in this case, this paragraph material uncertainty relating to going concern will be used. Otherwise, this paragraph will never ever be used. Can you understand this? If company is having a cash flow issue, financial statements prepared on going concern basis with no disclosure, mean management didn't disclose this issue. Qualified report because only one disclosure is not there. But this is very, very important. This is also important. When material uncertainty related to going concern paragraph should be used in the audit report, if company have correctly disclosed cash flow issues in the financial statement. So we'll say financial statements give and fair and are prepared according to accounting standard. But company has disclosed there is a cash flow issue. How we should highlight this? Not if this is a matter paragraph, we will use material uncertainty relating to going concern paragraph. This paragraph is also called going concern paragraph. And only in this case, this paragraph will be used, otherwise never ever be used. 5 years back, for this emphasis of matter paragraph was used. But now there is a change in standard. Now to highlight cash flow issue disclosure, you need to use going concern paragraph rather than emphasis of matter. If the paragraph cash flow issue disclosure was required in the financial statements but was not provided, in that case, we will issue qualified report. Mean either emphasis of matter paragraph, either material uncertainty relating going concern paragraph, they will be used with unqualified opinion. They will not be used with qualified adverse opinion. So going concern mean company will continue its future its business in next foreseeable future. It could be the indicators of going concern. Mean during audit, how we can understand company is having problem or not. There are some indicators that will provide information whether company is going concern or not. There are some financial indicators, some operational indicators, and some other indicators. What could be the financial indicators of going concern issue? Net liabilities or net current liabilities position mean companies' liabilities have been increased. Mean this is an indicator of going concern issue. Mean companies are struggling to pay liabilities. Fixed term of borrowing approaching maturity. Mean you have obtained a loan. Now it's a time to repay the loan and you don't have money. This means there is going concern issue. Indications of withdrawal of financial support by creditors. Creditors has asked now you can buy on cash, not on credit. Why? Might be previously you haven't made the payment on time. And obviously, if you will not be having cash, you will not be buying any inventory. If you're not able to buy any inventory, you will not be able to produce and sell to the customer. So you will lose your customer. There will be going concern issue. Negative operating cash flow. Mean your cash flow showing negative balances. Cash from operation, cash from investing activities, financing activities. There is a negative balance. This means company is struggling in managing its cash going concern issue. Adverse key financial ratios. Mean financial ratios are becoming adverse as compared to previous year. GP margin has reduced, sale growth has reduced, profit margin has reduced. Substantial operating losses are deterioration in value of asset. Mean your asset value going down. You are suffering high losses. This means going concern issue. Arrears are discontinuance of dividends. Mean you are not paying dividends to shareholder. Whether they will keep their investment in your company or withdraw. Withdraw. If they will withdraw, you will not survive. Going concern issue. Inability to pay creditors on due date. Obviously, they will not supply you anything. Inability to comply with the terms of loan agreement. They will call back their loan. And if you will not be able to pay back, they will sell your asset that you have kept as a security. Changes from credit or cash transaction with supplier. Means supplier have said no credit basis. Now you can buy on cash basis. Inability to obtain finance for essential new product development or other essential investment mean you need to make investment in new products, but you don't have money. And if you don't launch something new, your customer will move towards competitor your sale profitability will go down, going such. There could be some operational issues. Management intentions to liquidate entity or to cease operation mean management have decided we should discontinue the business. Loss of key management without replacement. The main person who was managing the business, he left the company. There was a hospital and the main doctor left the hospital. There was an institute and the main teacher left the institute. Obviously, where teacher, doctor are moving, all customer will be moving there. Loss of major market, key customer, franchise, license, principal supplier mean your main stakeholder have left you. If main stakeholder is not with you, you will not survive. Labor difficulties, strikes will create going sun issue. Shortage of import supplies mean you are importing material from outside the country and now you are unable to buy that material. Important supplies mean material that become short. This means you will not be able to produce your product. If there is no production, there will be no sale. Emergence of a highly successful compactor. A new compactor entered into your market with some better quality and lower prices as compared to you. Who will buy your product? Nobody. You will not survive. There could be some other non-compliance with capital or other statutory requirement. Mean you are not complying with law regulations, meeting loan agreement conditions. Pending legal or regulatory proceeding mean there is a court case going against you and chances that you will lose and you have to pay a huge amount against them. Change in law regulation mean government has strict the business that you are operating. They have banned any of the product you are selling. You are selling tobacco and government have banned that. You are running a shisha cafe and government have put ban on shisha. Uninsured or underinsured disaster when they occur mean there was a big disaster that destroyed some of your assets and your assets were not insured and you don't have money to buy asset again. So these are the indicators of going concern. Examiner could ask in MCQs. I mean, they might provide 4 or 5 options and ask you which options are indication of having a going concern issue. So we have discussed going concern. Material uncertainty related to going concern paragraph when we should use when management have provided cash flow disclosure in the financial statements. Where it should be placed? Where it should be placed? Where emphasis on matter paragraph will not be placed. Mean before can, after basis for opinion. So that's it for today. In next lecture, we will discuss a few topics and might be topics will be completed.
What is next lecture?
When is it?
Next lecture?
Next lecture will be on Friday
Class in verification.
and on Saturday. Saturday 4 to 7. You people are destroying my weekend. I am sacrificing my weekend for people so that you can pass.
Class Monday.
Coming Monday, we'll be having class.
No. Yeah.
PM, no, but on Monday I'm busy. I'm busy with the BT people.
Let's get started.
Last
മീറ്റിംഗിൽ നിന്ന് ലെഫ്റ്റ് ചെയ്തോ? സാറ് മീറ്റിംഗിൽ നിന്ന് ലെഫ്റ്റ് ചെയ്തോ?